And I'm pleased to introduce you to today's speaker, Michael Sudjati. Hi, Michael. Before his current role as the CEO and managing partner of Anchor Global Office, Michael has had over 15 years of experience combined working at KPMG and also served as the CFO at Gary's Beverly Hills. Anchor Global Office delivers accounting and financial process solutions that redefine work and unlock productivity. So be prepared to ask any finance-related questions that you may have for Michael through the Q&A button, as I mentioned, and we'll be sure to get to them at the end as much as we possibly can. And without further ado, please virtually welcome our speaker, Michael Sudjati.
Today, really grateful to have the opportunity to talk with everybody about just cash flow and how it's been affected during this pandemic time. Just a little background on myself. As Esther had mentioned, spent a little over a decade at KPMG, and then another decade plus on the corporate finance side. And then sprinkled throughout the past 10 years, have co-founded a few companies and made a few venture investments along the way. After today's talk, we're hoping that we'll be able to explore some of the pandemic's impact on SMBs and the accounting functions, learn some best practices for reducing cash flow anxiety, and hopefully understand how to develop actionable plans towards providing cash flow clarity for your business. Our agenda today.
I'm sorry to interrupt you. Your slideshow is still on the title slide. I just wanted to make sure that you caught that.
There you go. Sorry about that.
Yeah.
So we've got, here's my background, and here's at the end of this talk, here we go. So at the end of this talk, we'll hopefully explore some of the pandemic's impact on SMBs and accounting function. We'll learn some best practices for reducing cash flow anxiety, and we'll understand how to develop actionable plans towards cash flow clarity for your business. I've broken down the agenda for today into 5 parts. Cash flow and SMBs, the cave of the unknown, cash flow consequences, something I like to call mise en place, and then just starting today. So let's begin. So does this sound like you? You're constantly worried about making payroll, often asking yourself, can I afford this? You feel like you're getting pulled in every direction. How many hats are you wearing today as a founder? If you're like me, you're definitely knee deep in payroll, operations, marketing, HR, and lately for me with my kids as a personal chef, private tutor, and PE coach. But from my experience in working with startups and SMBs over the past decade, we really only oftentimes look at our financial data under 3 common scenarios. The first one, being payroll time, right? And especially if cash is stretched. I know I'm constantly worrying about payroll when it comes around. And this is probably one of the core truths that every founder must embrace when they embark on starting a business, right? But ironically though, interestingly, it's also the biggest source of anxiety, but also the biggest source of purpose and joy as a founder. The second scenario is obviously when a business needs to make a meaningful purchase or hire, right? When you need to hire more team members to accommodate growth, or you need to purchase that new piece of equipment or service offering. And then lastly, the third common scenario is it's year-end reporting time, or even worse, it's tax season. Your investors are asking for their reporting package or their monthly reporting package or quarterly, or your tax CPA has finally gotten you into queue and is now bugging you for your year-end information so that they can file your taxes, right? These 3 are definitely more often than not. These are the the three scenarios that force us as founders to think about cash flow and push it up the priority list for the day. So the cave of the unknown. In the recent study from the CEO Outlook study by KPMG, they noted that 70% of CEOs believe agility is a do or die for business, and that being too slow can lead to obsolescence. You know, so what does that mean for an SMB to be agile? Well, it means to be able to move, obviously, to move quickly and pivot when needed. And historically, you know, this has been one of the only competitive advantages that SMBs have had when compared to large corporations. Less bureaucracy, less paperwork has traditionally equaled faster decisions. However, in order to be agile, we need visibility. And unfortunately, visibility is especially challenging in today's pandemic. Being able to see past, you know, 1 month, 3 months, 6 months, it's extremely challenging. I mean, I know in the past 6 months, we've had to really focus and help a lot of our clients with their cash flow in order to, for many of them, in order to just survive. And so this kind of leads me to talk about what you know, we call it the cave of the unknown, or back in my KPMG days, we called it the cave of poop. I knew, you know, the cave of poop is that little space inside of you that, you know, when you know something is festering in one of your teams, or there's an important strategic priority that you've been putting off, or on the client side, you know, something is literally building up. One example that comes to mind for me, you know, back in the day was with one of my entertainment clients, and they had an accounting manager that literally, for whatever reason or another, he built up 14 months of bank reconciliations that he just didn't review and didn't work through. You know, and that resulted in, I think it was north of $1 million adjustment to their cash balance. Now, thankfully, they were large enough of a client that it wasn't a meaningful hit, although there were a lot of upset executives. But they had that significant margin of error, right? But what would that margin of error be for most startups and SMBs today, especially during this pandemic? Probably a lot less. And, you know, interestingly, I remember asking the accounting manager, I said, why did you literally take, you know, the bank reconciliations and literally put them in your bottom left drawer, and then eventually it got stacked too high, and he started putting them in his right bottom drawer. Like, why did you let that happen? And his response was, he got behind and it just snowballed, and eventually he couldn't face it. So the cave of unknown, you know, it's always filled with those things that, you know, things need to be attended to, you know, you need to face, but sometimes we procrastinate or we put it off. But eventually, you know, eventually it kind of gets larger and larger, and it breaks through, and then we have to face things, and we have to face the cash flow consequences of those things. So some examples of cash flow consequences, you know, first off, your decisions matter, and some of your non-decisions even matter even more, right? And the cadence of our decisions today are happening a lot more frequently. Those moments that matter are happening sometimes hourly these days. And making those decisions as informed and as accurately as we can is extremely important. I mean, remember payroll, you know, figuring out today, will you have to reduce salaries? Will you have to entertain furloughs, or even worse, permanent job cuts? A lot of SMBs today are trying to figure out what to do with office space. How much space do we really need? How will reducing space, you know, affect operations, morale, efficiency? ultimately the bottom line. And as founders, I found that most founders, we tend to all be able to do it all, right? We have the ability. I mean, that's what's given us the confidence to start businesses. But oftentimes it equates to bottlenecks in the business, and we become less agile at precisely the moments when we need to be more able to pivot quickly. Or sometimes and oftentimes it'll manifest itself in stunning growth, or even worse, creating more underlying risk of obsolescence to the company. One a good example of a client of ours who, he previously insisted on, he was a former CPA and he started an apparel company, and he would insist on, spending 8+ hours a week of his time manually entering POs to quote unquote save money, and instead of, he could have been spending that time working on his direct to consumer channels, his brand, his branding, his own website, right? And he went through years of this status quo, completely unaware of the cave of poop that was building, the underlying obsolescence risk that was accumulating. And then during the pandemic, those big box stores, clients of his, they left him twisting in the wind with millions of dollars in inventory. And that was, it was a bad situation, but thankfully he was able to work through it. So, our decisions really do matter. And again, our non-decisions often matter even more. It's a simple truth, but it's something that I definitely have to remind myself on a daily basis. So where do we start? Well, mise en place. We prepare, and we prepare some more, right? Mise en place is a French phrase that literally translates to everything in its place. The cadence of our decisions, as we discussed, is a lot more frequent, but it's even more critical to have our best and to have everything in its place as much as possible. And this whole concept of mise en place was really driven home to me a number of years ago when I co-founded and started a restaurant called Ramen Champ with my business partner, Alvin. And Alvin, he really helped me understand mise en place and the importance of preparation. He really stressed to each of the line cooks and chefs how important it was to prepare their station, their equipment, their knives, pots, and pans, and have their process ready, having their ingredients organized and prepped. And having everything prepared and ready really helps us manage the constant barrage of decisions that need to be made amidst our frenzy of the kitchen on a daily basis. So for cash flow purposes, it means having our accounting data reconciled and up to date as possible. In my opinion, SMBs today, they can't approach their books as business as usual, as something that can be attended to last minute or as a second thought. It's even more critical today to have everything prepared and in its place. So here's the general process, and we have to trust it, really. It starts with the accounting data, but it then moves to being able to take that accounting data and make meaningful scenario planning. And then from those different scenario plannings, making decisions based on that data and those scenarios, which then moves on to the financial reporting, and then analyzing the results of your decisions. And it creates that genuine kind of cycle of information. And this general process actually made even more sense to me after attending a WeWork lab session just like this on OKRs, or objective key results. I didn't necessarily call it this process over the past 20+ years, but at the core, it's very much the same. I spent lots of focus over the years on on the OKR process and setting up KPIs for marketing purposes and campaigns. This is something that I think a lot of founders are kind of learning very quickly these days. And I really believe it's combining the principles of finance and accounting with marketing that where real value is actually created. A great example of that was in my previous position at Geary's, where I actually led the process in completely redesigning the marketing paradigm for the company. And really the value that I was able to bring was bringing together my accounting and finance department with the new marketing department and creating an analytical framework to the marketing side and setting up those OKRs and KPIs for different channels, campaigns, and platforms. So this is one of my favorite quotes, and it's by Mother Teresa. "Yesterday is gone. Tomorrow has yet to come. We only have today. So let's begin." So let's start. And I thought it would be helpful today to kind of have something tangible to work with. And so what I did was I pulled up one of my templates that the cash flow templates that I found useful for some of my clients. And it's actually a very basic cash flow planner template that it's actually provided by QuickBooks, and you can find it online as well. And so, for me, one of the biggest ways I manage risks for my businesses is actually working through a cash flow scenario plan, no matter sometimes big and sometimes small. But it all, as you can see here on the first page, on the first tab, it all starts again with basic bookkeeping. Remember mise en place. So I really suggest, you find an approach or resource to getting all of your income statement items properly categorized on as frequent as a basis as possible. I actually really recommend moving things down from more frequently, from either quarterly to monthly to even if you can daily. This way you can really try to make sure that all your transactions are here, reconciled and your books are clean. It'll give you a good starting point, a cash balance point to begin with. On the next tab on this template, you'll see you'll have basically everything broken out by weeks, and it gives you kind of your starting balance from the previous tab, and then it gives you your net cash flow across the weeks, and over here it shows you, it'll calculate based on your inputs how many weeks until you reach zero cash flow, and which week is identified. So really it starts at the top here with your money in, or your cash flow in, right? So you'll enter in, amounts for any outstanding invoices in each column, mapping them out for doing the same for expected income. And then down below here is a section here where you can do some really basic scenario what ifs, explore options for increasing cash inflow. And QuickBooks offers some ideas here, from everything from, personal savings to stimulus checks, of lately PPP loans, SBA loans, and so forth. But really you can customize it however, however fits your scenario. Down below, the money out portion, you'll enter in your unpaid bills, and you'll put them in the appropriate due date columns or weeks, and you'll do the same for your expected expenses. And then similar to above, you'll have the opportunity here to do some what if scenarios as well, exploring options to reduce your cash outflow, right? Whether that's, deferring loan payments, optimizing your AP payments, the timing of those AP payments, or making payroll adjustments. The net result from this template really will basically calculate up to this net cash flow line, and that's how it kind of flows through. it also has on the third tab kind of a good summary and visual projection on everything you've inputted and worked on. So yeah, so this is really I would say a good starting point, right? It's a good cash flow planner. It's a useful planner that you can quickly put together. But again, it all starts again with having your mise en place ready and having your books and your bookkeeping kind of up to date as possible. So I'll switch back here to the presentation. So substance over form, always. This is a phrase that a lot of my Anchor team members constantly hear me saying each and every day. You know, sometimes as accountants, we can get caught up in form and template when it really is about the substance that matters. The substance and the real substance here is going through the cash flow items and possible scenario planning. That's really what matters. Don't get hung up on the template. There's so many different types of templates, and this one from QuickBooks is a basic one, and they have other ones as well if you're a QuickBooks Online user. There are a lot more complex templates out there, you know, ones that dig into more detail around accounts receivables and accounts payables, and analyzing how those two balance sheet items can affect your cash inflows and your cash outflows. And there's also ones that provide even more extensive scenario-based planning, you know, rolling 3, 6, 12-month forecasts. Recently also came across a number of months ago a SaaS platform called Float App that provides more visual extractions of your cash forecasts, allowing you to enter in multiple budgets per line. And they get even more complex with utilizing RPA or robotic process automation, machine learning, and AI. But really the real important thing and the substance that really truly does matter is that you start somewhere and that you build a financial planning and analysis process that's right for you and right for your business, and really make it a core process for your business, not an afterthought. And hopefully in doing so, you'll make yourself a more agile founder and an agile business in the process. Thank you.
Amazing. Thank you so much, Michael. I know you put a lot of time and thought into your presentation, so we're super grateful to have you. I'm sure there are a lot of questions, so folks, please direct all your questions to the Q&A button on the bottom of your Zoom screen. I did get a couple directly messaged, so starting with, and I think this person is referring to the spreadsheet that you are on.
Yeah.
So we can go back to that maybe.
Sure.
The question is, what is the lowest number you should ever see in your week to zero box?
Let's see here. Let me just. So I mean, really that depends on, that's a really kind of dependent on what you're comfortable with, right? I mean, some of my clients, you know, they don't like to see their cash balances go below, you know, $20,000, you know, or some are okay with it hitting $5,000, right? I mean, really at the end of the day, it comes to it depends on your comfort level. And I would say, I try to, just because, especially for, I'll call it, let's take a tangible example, right? So if you have a number of our clients, you know, they're average around, you know, 5 to 7 million top line, right? And they have a number of different expenses and AP payments that kind of routinely come through. A good place to start there is figuring out what does that monthly number look like, and then add a little cushion to it. So that oftentimes that'll end up being around, you know, $10,000 to $20,000. You know, I think is a solid amount to have in there on a weekly basis, just so you don't have to worry about, you know, those stressful times when you have to realize, do we have enough money in our account? Like, what something, you know, something hits that maybe that wasn't fully fully on the radar.
Mm. That's a good point. So figuring that out first, and it really depends on your business and how much money you want. So what are some avoidable rookie mistakes people make when they begin their bookkeeping process?
That's a great question. So I think, when it comes to bookkeeping, unless you're a CPA or unless you're an accountant, it's something that you don't really want to you don't really want to focus on, right? And sometimes it's it's one of those things that I think people like we talked about, the biggest rookie mistake I would say is just putting it off, right? Or thinking that you can get away with not balancing your books on at least a monthly basis, right? And really looking through your bank reconciliations and figuring out what where things are at. And then I would say another rookie mistake for a lot of SMB founders, it's having that I'll call it that hubris of they can do it themselves, right? But really, at the end of the day, as a founder and as a leader for your company, your biggest job really is to grow the company, right? Or to take care of your team members and your clients. And so, doing basic bookkeeping stuff, sometimes it's better just to bring somebody in, or bring somebody to take that off of your shoulders.
Yeah, so definitely just get started, like that Mother Teresa quote you had. I think definitely the rookie mistake would be to not do this. And sort of related, this next question, when is a good time to do this yourself versus hiring an accounting firm or working with a professional like yourself?
Right. So I guess it would depend on, obviously without any specifics, it depends on your situation, right? And where you're at and how big your company is. And I started Anchor Global Office. I realized that that large corporations back in the day, they were utilizing and leveraging kind of a global workforce, for 2-3 decades, and they were able to offer even more value to their clients because they had an even more diverse, team of individuals to help their clients scale in a certain way, right? I started Anchor Global Office because I realized that in the SMB space, that same offering really isn't available. Most SMBs today, that I talk to, that we work with, that come on board, they're coming from working with either two very different paradigms. They're either working with a $25-$30 an hour bookkeeper that maybe has a lot of experience in bookkeeping, but doesn't have a lot of the analysis or analytical input into the process. Or they have, I would say, like, really, I'll call it expensive CPA firms that have great brand name and have great analysis, and you can tap them, but they also come with a really high price tag, right? But finding something in the middle that's right for you is really important, right? And figuring out, where that fits into the process. I think I would say is tremendously critical. But ultimately, it's also who you feel comfortable with, right? And who do you feel comfortable asking questions with, and really dynamically working with your I don't even like to call it bookkeeper. Really, I like to say is SMBs today, they really need accounting and finance functions. They absolutely need, whether that's in-house or outsourced. You need a resource to be able to bounce ideas off of, to dynamically work with your mise en place, your books, and then that way ultimately that'll make your organization even more agile.
Great point. And folks would be happy to hear that Michael and I are working on putting together some perks for WeWork members. So stay tuned for additional news on perks from Anchor Global Office. Michael obviously has a lot of experience and knowledge, and is happy to help out any
Absolutely.
members in need for this sort of questions. I don't have any additional questions coming in, so let's just see for another 30 seconds or so if other questions do come in. But I am going to launch the feedback poll now, just to see how folks took took this webinar. Michael, I think you used a lot of great analogies, a lot of great imagery. I know you prepared for a long time, and thank you so much for sharing a lot of great resources with us. This has been super engaging and helpful, and I can't wait to do additional insightful webinars with you.
Absolutely. Thank you.
Thank you all, and I hope you enjoy the rest of your day. Bye, y'all.
Take care.